Hello, hello.
Hey, everybody.
Hi, guys. Welcome
What's
to
going
our
on?
first live. We're so excited. We don't even know what to do with ourselves.
Yes, y'all happy to be here? So we're going to give everybody a few minutes to tune on in, but y'all can go ahead in the comments. Let us know that you can hear us. You can see us. You want to go ahead and tell us something? You go ahead, friend. Okay. You know, it's going to be a little bit of a lag situation. So if you post the questions up or your answers, not your answers, your questions, we may see them a little delayed, but we're going to get to them, okay? And we try to hold the questions until the end, people, so we can answer them all at once and keep it going. Because we like to give you a presentation first, give you some information, right?
Yes.
Because maybe we might answer your question as we're presenting.
Right. But don't be afraid to ask those questions.
You better not be.
They're necessary.
Yes, indeed.
Like we always say. So just we're just giving everybody a few minutes. So
that's right.
We'll be back.
Hey everybody, welcome to the first ever live. I'm Taja, the Mindset Coach.
And I am Trish, the Budgeted Financial Guru.
And together, for those of you who don't know, we make up Achieve Her Investments.
That's right.
We're happy to have you on a Wednesday. I know we threw our regular people off. We do Thursdays, but we got some stuff going on. I'll be traveling tomorrow. So that's why that's why we had to jump on and do the Wednesday. And plus, a lot of you guys had missed this replay, so we wanted to give it to you again, but live this time, right? Because new people means new questions, new things pop up.
That's right.
All right, so what we're gonna do is go ahead and get to the presentation, start it and kick it right on off.
Yes.
All right, so Trish, if you want to kick them off and start the presentation, you guys are free to leave your questions, comments, anything in the chat. Okay, we do wait until the end to go through the questions, but it's good to let us know that you can hear us. So if anybody can just let us know right now, can you guys hear us? Does everything look clear? And please just keep us posted throughout the presentation. Yeah.
All right. So, as you guys know, today we are going to be talking about trading options on a budget.
That's right.
All right. So, before we begin, I just have a few questions. First question is, which trading platform do you use?
Yeah.
Now, you guys can go into the live chat and answer just whatever trading platform you use.
Hey,
currently.
Greg. What's up, Veronica? Some of you I can see in here. So, yes, in the comments, please let us know which trading platform you use.
Yes.
Whether that be Robinhood,
Webull, TD Ameritrade,
right, Stockpile,
E-Trade.
Stash,
what?
Cash App.
Right.
What you got, people?
So I'll start, I guess. I use Robinhood for options and for fractional shares.
Okay.
And for like my long-term, even though we're talking about options today, I'm just going to say for my long-term stocks, I use E-Trade and Ameritrade.
Okay. I see people saying Robinhood.
Mm-hmm.
Okay. What do I have? I have Webull. I have TD Ameritrade. I just downloaded TradeStation. So we're going to start playing with that as we progress into charting with this one. What else do I have, Trish? I don't know, Stockpile for the kids. So that's a great app. So if you guys got kids, we talk about that in different call, but Stockpile is a great app. Hey, Miss Davis. She said Robinhood too. So let's go ahead and ask the next question then. All right.
This is the most important because it pertains to the call.
Yes.
Who has options enabled on their trading platform? We just need a Y for yes, an N for no. My answer is Y.
So yes. So again, if you have options enabled on any of your platforms, we need a Y. And if you don't, then we need an N for no. That way we know the basis of who's on the call and how this, how the information will be helpful to you.
Right.
Okay, Wendy. Wendy got Robinhood, TD Ameritrade. Okay.
Sorry, if you're wondering what we're looking at the live chat. So
right.
Yeah.
We're trying to make sure we stay on top of this part for you. Greg, we know you got options enabled. Look, we thought we were teaching you and we over here learning. Like, wait a minute, what he got?
Right. And Greg, I got your question, so I'm gonna be answering that at the end. I got you though, friend.
Yes.
All right. So we have people who have options enabled, so that's great. If you do. If you do not,
no problem.
Not a problem, right. But if you want to trade options, you do have to enable it. And it will go through, like it'll ask you a series of questions before you can enable those options. But the trading platforms are required by law to ask you these questions. So you just have to, answer them in order to get options enabled.
Right.
Okay?
Right.
Now, first of all, what are options?
What are they, friend? You gonna break it down?
I'm gonna let you break it down.
Okay, so I'll go ahead and tell you guys. So options, in a nutshell, are financial derivatives, right, that are based on the value of an underlying stock. So it's correlated, of course, to the stock. So that's why we tell you guys to pick companies that you like, that you already know, because once you can track the movement, you'll do probably better with the option game because the option functions off of the stock. It's not the other way around. Okay. It gives the buyer the right to buy or sell an underlying stock. So we focus on, for beginners, buying calls, buying puts. If you don't know what either of those are, don't worry, we got you. But we focus on buying. We want to be clear on that. There's nothing wrong with selling if you do and are interested in that. And we know people who are doing very well with those, that's fine. But for beginners, we stick with buying first. The premium is the current share price. That's that market price. That's how much you'll pay for that contract. And one contract equals 100 shares of that company. That does not mean ownership. It just means you have a contract. Now remember, it's the right to buy or sell. So you do have the option to exercise that and own those shares, but that is something that you have to do at a later point. Okay, so buying one contract just gives you 100 shares to trade. All right, it is not ownership.
All right. So what do we mean by on a budget? First of all, don't believe the hype. A lot of people will try to convince you or will try to sway you from trading options because they're going to tell you, oh, you need such and such amount of money in order to get started. It's just not true.
Nope.
You do not need a ton of money to get started on options trading. We started with very little money.
$35 to be exact. $35.
You don't need a lot of money to get started.
Right.
Okay. And all of your coins count. When I say this, I mean going into the trade, your money counts, and coming out of that trade, your money counts.
That's right.
People think that a $30 gain is, oh, I know that's just a little bit of money, but no, like small wins are wins too, especially if you have small, consistent wins. I would take small, consistent wins over a big loss or even a big win. I would take those small, consistent wins any day because they count. Okay. Lastly, $100 is plenty. It's plenty. You can buy multiple contracts with $100. So don't ever let anyone tell you that you cannot use $100 or less to get into the stock market. Like we said, we started with less than $50. So you don't need a ton of money to get started with trading.
Right.
All right. So why you should trade options. Number one, low pay to play. Like I said, start with as little as or less than $100. Return on investment. So your return on investment is uncapped. There is no limit to how much you can make back or how much you can profit. Leverage. There is tons of leverage with trading options. Why is my brain going blank today? I'm like, what is happening to me today? Knowledge. So you gain a ton of knowledge with trading options, not only with how to trade those options and the things that go into it, like the strategies and analyzing and things like that, but you also learn about the companies that you're investing in, which is why it's so important for you to choose companies that you love. Like you'll hear us say that all the time, because people ask all the time, oh, which companies do you guys recommend? My question is, which companies do you love?
Right.
Because you watch those charts, you analyze those stocks, and it'll help you determine which contracts to buy. So you'll gain a ton of knowledge on options and on stocks when you're trading.
Yep.
All right. Lastly, loss cap. You can only lose the amount that you invest. So if you invested $35, the most you can lose is that $35. But like I said, the return on investment or the potential profit is uncapped.
Meaning it goes high to the sky as you never even thought.
Right.
Y'all heard me just sing there. That's how high your money can go. I don't ever sing. Okay. So, but anyway, that's the best. Like the fact that that, okay, I got $20, I got $30, I got $100, whatever it is you have. And I'm willing to lose that. But remember, the better you get, we tell you always about minimizing your risk, right? Mitigating it. So there's ways to prevent you losing your whole 20, your whole 100, whatever it is. But that return on investment, that ROI is real, friends, And if you pick a good option, it can swing back and forth like crazy. I mean, if anybody has been in the Neo play, over the last few days, that's what's been happening. Okay, we can take them to the next slide, friends.
All right, so Taj, let's go over some important options lingo.
So I'm going to throw this out in the chat real quick just to see where we at. And if we're paying attention, people, those who do know about options or even a little bit, even my beginners, come on and put it in. If you are a beginner, if you've never heard of this and you're just excited to learn and be here to try something new or you ready to get in the game, let me get a B in the chat. A B for beginner. B. Okay? But this question is also, I'm going to hit you with a duh. Okay? Calls. If you know what a call is, tell me, would the stock be going up or down? So a U for up, D for down. If you pick a call option. Okay, so the first thing I want to know, if you're a beginner, hit me with a B. Straight B. Brand new. Look.
Baby.
Okay.
Fresh out the womb.
We got you. And if you know what a call option is, tell me, is the stock price going up? So that's a U. Or is it going D, down? And we know there's a lag in the chat. I'm sorry, guys, but that's why I can't see them so quickly. Okay. Hey, Stephanie, I'm so happy to see you.
Let us know. Let us know.
We got you, girl. Don't worry about it.
Right.
Okay. Yes. Yes, Brandon. Yeah, Greg. So you. Right. So the stock is going up. So this is what a call option is. All right. A call option is your expectation of it appreciating, right? Of it rising. I just noticed that was on the screen the whole time. Y'all cheated. Y'all cheated.
They didn't cheat because you acted differently.
I'm just kidding. So that's what a call option. So if you expect the stock to rise, okay, then you want to pick a call. All right, hit me with the next one, Trish. Okay, put is the exact opposite. If you expect the stock to decrease in its price, then you would pick a put option. All right. Now we're going to the premium. This one we said a little bit ago, but here it is again because it's still important. It's always going to be important. Premium is the price you pay for the contract. All right. So that is your investment. Think of it that way. All right. Strike price. The strike price is your target. So that's the target that you're aiming the stock to hit, whether that be going down as far as a put or it be going up as far as a call, right? Because you have strike prices on both calls and puts. And the great part about options, friends, is that you don't need that stock to hit that strike price. You just needed to do what?
Go in that direction.
What you say?
Go in that direction.
That's it. We just needed to move the way we wanted to move. Okay. So that's the key about options. All right. Hey, look, if y'all saw my contract the other day, you don't even need to hit that break even. You just need that thing to chug, chug, chug. And remember, that's up or down, right? Because I don't know if you picked a call or a put. And on some plays, like 4, we're just gonna drive that out there. Okay, you play both ways because you don't know what they're gonna do, and I don't think they know what they're gonna do.
They don't know what they're doing.
We just trying to get money either way. Okay. Let's see what the next one is. Expiration. So this is a must, right? We get a lot of questions that ask this, like, I didn't see expiration date on my contract. That already indicates to us that you bought a share, right? Because when you own shares of the company, you don't have an expiration date. You simply sell them when you want, or you can keep them forever, right? Options, there's no way to get an option contract without an expiration date. It's like a contract in any essence, right? That you write with the friend, that you write with the bank, that you write with the job. You have, well, no, that's only if you leave in your job, you get the expiration date. But you get what I'm saying. You got to sign and date everything. It has a date on there. So these expire every Friday. Okay. And you can push that thing out as far as it would allow you. Some stocks right now, options can go out to what?
2023.
Yeah.
January 2023.
So you can buy something all the way out till January 2023. Okay. Right. So all you do is just toggle that thing and we'll show some stuff. Toggle it and you'll be able to see the different expiration dates as well as strike prices going up and down. Okay. Right. Okay. Bid. These are the buyers. All right. So that means the ask are the sellers. All right. So remember, if you don't know, take this key point. You buy at the ask price, right? So think about just like at a grocery store. You pay what the cashier is saying the total is, right? So she's asking for payment. That's what you give her. Okay. You sell back at the bid price. Okay. I know it gets a little tricky when you don't see it, but just so you understand. All right, go ahead. In the money, we like in the money. Don't it just sound good?
It does.
Like I'm in the money.
It is, yeah.
Right? It just got a ring. Okay. So when you're in the money, you already popping is what we would say. Okay. You already have intrinsic value. That means soon as you buy this contract, you're already profitable. That means for a call option, you are buying something that is below the strike price because it has already passed that number. So you're already good. If it's for a put option, it's the opposite. You're buying something above the strike price. You're already good because they've already passed or went below that number.
Right.
Okay. So that is in the money. So we're already good. People are already profitable. So just so you know, when you buy in the money, these are typically the more expensive contracts. So your premium is a little higher on these contracts. Out the money. Now y'all know these my friends. Okay. Out the money is the one I really talk about the on a budget, these contracts, because you can get them very, very, very cheap. And you can buy a lot of them, right? And there you go with leverage. Because if you buy more, that means you're getting more than 100 shares, right? Each contract is 100 shares, okay? So don't be fooled just because you couldn't buy the one in the money. Maybe they only bought one. But what if you bought 20 out of the money, right? You could have spent the same amount of money, but they got way more contracts. Think, friends, right? So out the money has extrinsic value. So that means it's time value. You're giving that option time to hit or just move towards that strike price that you picked. You can leverage this because we said it's extremely inexpensive. Oh, and for out the money, I'm sorry, you need implied volatility, period. I know it's a term, we didn't get to it yet, but you need it. You need it, period. Yeah. Okay, if you don't remember anything else, out the money, implied volatility. It must be there. At the money is literally there. Okay, so your strike price is at the current stock price. So if, give me somebody. Why were we gonna say Amazon? We talking about Amazon on the budget, and you don't hit me with Amazon. Anyway, so I'm gonna just go to Ford. The nerve. Ford, your even out of money options is high. Look, Ford people. Let's say Ford is trading at 14 something right now. Let's say 14.50. Okay, the at the money's strike price would be 14.50. Okay, that's at the money. If Ford is at 14.06, at the money would be $14. Okay, so that is at the money. It's whatever matches that dollar amount. Okay, and I think the only thing close they do after the dollar amount is a 50-cent move up or down. Okay, so anything
whichever is closer to.
Right. Okay, so let's move.
All right. So factors to analyze and more important lingo.
Yes, and if you were just following our IG lives over the last few Mondays before we got to the Greeks, guess what we were doing? Breaking down these stats. So guys, after you listen here, you can go to IG live, not IG live, but IG on the business page and check out this if you want more information, right?
If you want more in-depth on these terms. Okay, so the difference between the bid and the ask, the bid price and the ask price is called the bid-ask spread. So I'm just going to throw an example out.
Yes,
please, quick, because it just makes everything easier. So if the bid price is 5 cents and the ask price is 10 cents, the bid-ask spread is that difference. So that 5 cents that's in between, that is the spread. You want those two numbers to be as close as possible, just so that it's easier for you to get in and out of the trade. And it also makes it more inexpensive to get in and out of the trade. So let's just say, like, we're taking that same example, the 5 cent bid, the 10 cent ask. Mm-hmm. If you wanted to get into that trade, you would have to pay $10 because it's everything. When you're buying an options contract, it's times by 100. Okay, so you will pay $10 to get in. Now, if you wanted to get out of that contract quickly, like you're like, oh my gosh, I thought they're round one. I need to get out. You would have to sell it back at $5. Okay, mm-hmm. So you're losing $5 by getting in and out of that trade. So that's why we always urge that you keep those numbers as close as possible.
Right.
I don't like to go above more than 5 cents. For the difference, Taj will take a good 10.
Yeah. And then be very cautious, because since you want to mention Amazon, when you play with companies like that, let them know that bid spread is not 5 cent, friends. Okay,
it's huge.
It's huge, but that's because what? Because she has no reason to justify why they take that much of your money ever.
I don't, because I'm like, because I'm gonna pay it anyway. I don't do it often. I just do it sometimes. But because the company is so fast moving, and because that implied volatility is so
crazy,
it's typically all over the place, it makes that spread kind of all over the place.
Mm-hmm.
Okay. And you can have tons and tons of people in that trade and that spread will still be super wide.
Right. So remember, it's just about, when looking at an option contract, you want to weigh all the factors as a whole, right? If one thing is off and everything else is great, it's probably okay, right? It just depends on what that one thing is, and then what kind of strike price that you're after. So we just want to make that clear, but I do want to let you know, like if you see something on Amazon, right? If you see something, it could be Apple one day, it could be Netflix, right? And that bid spread is wide, we don't want to scare you and say, oh my God, don't get that. No, if it's a good contract, go ahead, just be aware of that. That's what we want you to know. You need to know what that represents. Okay. And these are relative to every company. So they look different, right? Yes. Implied volatility for Ford is not implied volatility for Amazon, okay? Right. Or NEO for that matter. So these are all relative to the company.
Right. All right. So let's
move Danny, on. By the way.
Let's move on. Open interest. Open interest is the number of contracts that are currently open for trading.
Right.
So the open interest is relative to the volume, which we'll go over volume in just a second. Mm-hmm. But we want open interest to be high.
Yes.
That's just, that's literally what it is. It's showing how interested people are into that contract. So we want that open interest to be high.
Right.
Volume, same thing. We want that volume to be high. The volume is the number of contracts that have been traded that day, bought or sold. Okay, it's the number of times that contract has been bought or sold that day.
Right.
Okay, this number we want to be high as well, because just like open interest, it tells you how interested people are in that contract. So, and especially if the volume exceeds the open interest,
that's always a plus.
We want that. We want all of that. Okay.
And let me just say, friends, real quick, while my friend explained this. Every number on this, every what do you call these? Factor. So, okay, under the stats, we want everything high. Just know that. We want to see high numbers, big numbers. So that can be 100 plus, 1,000 plus, those kinds of numbers. But again, remember, it's relative to that stock.
Right.
But what I want to throw out an indicator, because I know I was looking at things on the chart, in the chat while you were talking about the bid spread. The bid and ask, okay? If you see no buyers or sellers, okay, or 1 and 0, if 0 is ever the number,
run.
No. Don't you be the number 1, okay? No. Okay. And sometimes if you're on Robinhood, see, I don't know about this on other platforms, but Robinhood is trying to save you a little bit. Robinhood be like, are you sure you want to proceed? Okay.
No
that's like you needing to pay for, I don't know, a car or something, and somebody's like, are you sure you want to give me the money? That don't sound right, right? So you should know that, nope, I'm going to go ahead and back out of this. So if you already didn't know from looking at the 0, if they hit you with that box, my friend, you say, no, I don't want it either, because nobody else did. Because What happens is, we learned the hard way. At least I did, okay? I bought something one time, and at the time, I don't even know if it says 0. I doubt it, but who knows? It was so long ago. But what I will tell you is, I woke up and was like, Trish, oh my God, I'm 1,000 there today, girl. I'm 1,000. I was a couple thousand there too, like 10,000. Guess what, friends? Guess what? Nobody was in the bid, okay? So that means I couldn't sell it to anyone. Yeah, I was profitable, right? I was up 10 grand. Guess what? It didn't matter. It could have been $1 million. Guess what? You have no one to sell it back. So when people ask about or want to know what some people meant about the AMC or GameStop holding the bag, that's that. It's in there, but you ain't got nobody to sell it to. Right. So what difference does it make? So that's why you don't want to get caught with that, right? So they didn't lose anything, but who wants to see that kind of money and you can't get it?
You can't get it, right?
That's what I'm saying, okay? So let's go ahead, friend. You were on to implied volatility. My friend.
Favorite. My friend. So IV is the market's forecast of a likely movement in a premium's price. So when you're looking at implied volatility, it has everything to do with the premium price. The higher the implied volatility, typically the higher the premium is for that options contract. Right. And like Taj was saying, you want implied volatility to be higher when you're looking at out of the money contracts. Because it doesn't already have intrinsic value, you need that implied volatility to help that contract move.
Right.
So it's very, very, very important to
period. Period.
To pay attention.
There's no other way around it.
Right.
I know you're trying to figure out a word, but period is the word. I first want to say, hey Wanda, hey Artisha, how you doing? I'm glad to have y'all on here too. Implied volatility, because I don't know if you said that. It does not indicate direction.
It does not.
Okay, so what we mean by that is it does not say, oh, the implied volatility is high, so it's going to go up. No, it's saying it can move either way.
Right.
So for, and that means fast, right? It's a likely chance that this will move. That's what it means, okay? Exactly. So companies like Amazon, Tesla, Neo, Zoom, Netflix, companies like that have high implied volatility because they can literally jump out. And what did Amazon do the other day?
They did a $100 move. $130 move. I almost died. I was like, what?
Right. And then they could turn around the next day and do the exact opposite. So same move, but the other way.
Right.
Okay. So those are indicators of high implied volatility. Okay. Right. So we like that.
So yeah. So like Taj was saying, that high implied volatility means that the market is suggesting that it has a potential for a high movement
in either direction.
Just as a low implied volatility means that it's likely to have very little movement.
Right. Okay. Which does not mean that you won't make money.
Okay?
Right. Just like I said, you have to play and focus on the strategy that you use, because some people don't even play companies with high implied volatility, but they make money every single day.
Right.
All right. On to the Greeks.
The Greeks.
Greg said Ivy answered one of his questions. See, that's the best part about the call. Like, we might answer some questions right here live. And if you have anyone who's new, you can put your comments in the chat. Yes. That's all you guys see me keep looking down, because I'm looking at the comments and questions coming in. Okay.
Yes. All right. So the Greeks. The Greeks provide a way to measure the risk of a trade. So there are 5 Greeks: Delta, Gamma, Theta, Delta, Gamma, Theta, Vega, Rho. God, dog.
She had to sing it like a song.
Right. I have to say it the same every time. Otherwise, I'm not going to say it right. So they just help measure risk. Now, they're not something that you have to be super familiar with as a beginner trader, but as you begin to trade, you should
get better.
Get better. Right. You should come to an understanding of at least what they are.
And at least the top 2.
Which
I would say that.
Delta and Theta. If you don't know any other Greeks, we urge that you know Delta and Theta.
Right. And some resources that we use that we love, like Investopedia, don't even acknowledge all 5.
They don't. I think they only do Delta, Gamma, and Theta.
That's it. And they
and
Vega. They don't
do Rho.
So that tells you how significant some are to others. But and again, another thing for you, if you don't know about them, guess what we doing all really month is the Greeks right now. So we just covered Theta and we just covered Delta.
Yeah, right.
So you can check those out too in more details. Go ahead, Tristan.
All right. So I just want to close out factors and factors, stats and Greeks. I just want to close out by saying, when you're analyzing a contract, definitely look at all of these. Look at all these. Make sure you understand what they are. Like Tasha was saying, they are relative to that stock. So open interest and volume for Amazon is going to look totally different than open interest and volume for Ford.
Right.
Those are totally different sectors, but whatever, you get my gist.
Yes.
So yeah, it's relative to that company. So just keep that in mind when you're analyzing. Another thing is, there are things that we look at that are like hard stops for us. Like Taj was saying, if that bid is at 0, we don't even look at that contract.
No, close it.
If we're looking at Greeks and theta is higher than delta, nope.
Out of there.
But you're not always going to find a perfect contract. Like, you're not going to always find a contract with super high open interest, super high volume, a perfect bid-ask spread, perfect implied volatility. But if the contract is giving you everything, but maybe the implied volatility isn't that high, why not? You know, because
it also it depends on so many other factors. Like,
right.
Is that an out the money option? Is it
what time
out
of
the
day?
money? You definitely need implied volatility. So again, be clear on that. Out the money options, you need implied volatility. But what I meant to say was, is it a far out expiration, right? So sometimes when it is, there aren't that many people in it, right? Or the volume is low for now, but as it gets near that strike price, not the expiration date, that contract is going to get super popular. Or if you're buying and you're a great forecaster, right? That means, as let's say, what was tanking today? NEO was tanking, right? I wasn't happy about it, but let's not talk about that. NEO was tanking today, right? So I know, firm believer, they're going to rise. So what if I pick an option call for October, a call, right? For them to hit $55, right? So that's way out the money for them right now, right? And it's a far out expiration date. So maybe no one's interested in that. But guess what? If NEO hops out on tomorrow or Monday or Friday, forget it, and gets to 55, guess who's going to be real happy while everybody is trying to be me, right? That's what you want, because you want, it's almost like trying to get something before everybody else gets it. Because once they come, guess what? Your implied volatility goes up. Everything for your contract gets better, and they're paying for it. Got it? Okay, so it depends on those kinds of factors. So if it's a far expiration date, some of these numbers might be a little shaky.
Right.
But that's, again, you relying on you knowing about that company you chose, right? Why do you think this is going to be good, right? People who are forecasting Tesla to rise to what it was a year ago, right? They might have the money to go out far and weigh out the money, but they're probably making a very smart investment. So that's what it is. If you look at AMC, right? Some people want to ride the wave. We're trying to ride the downfall, waiting on it, because it's going to happen. Do we know when? No. Just like for GameStop, those are put options. So those contracts don't look that great, but just watch.
Yep.
That's what it is. It's the same way that people played the plays for the calls. They didn't have any idea that AMC was going to hit $72. No, but guess what? If you just had an option that it was going a call back when it was 20 something or $17, and you had it that it was going to reach what? $20, $30, right? Guess what happened to you when it hit $70? You were loving yourself. Let's just say that, okay?
Yeah.
And I was kicking myself because I didn't buy it, and I looked at it. You know, I was like, I don't know if they're gonna do this, and they did it. They did it.
Yes.
Okay.
Yeah, and then another thing, like, it depends on the time of day that you're buying. If you buy early in the morning, the volume's not going to be high, because remember, that's how many times the option contract was bought and sold. So it might not be super high because it's at the beginning of the day. So
great point.
Yeah. So it also depends. Thank you.
Yeah. Like, wait a minute. Did I even think about that?
So time of day is also important to look at. Just like during like 11:30 and 1, usually for the stock market, implied volatility is not going to be super high.
Nothing's really happening.
Yeah. Mm-hmm. Okay, or people are selling off or whatever. So,
right. So the deals are really happening around market open and market close, or power hour. Right. Greg said yes. Delta and gamma theta, yes, please.
We want them all of them. All right. So here are some examples of some cheap contracts. Pull out my handy dandy laser pointer.
You know, her favorite laser. Oh, while we're doing this, hey guys, for everyone that's now tuning in, we're glad to have you. If you are a beginner, please put B in the comments, okay? If you do have options enabled and you do options, let's just put a O in there, right? Because you already getting money, or at least trying. If you don't know what options are, anything, I want you to put it in, like, nope, never. But you here, so that's cool. And if you winning, you're already making money. So if you Greg, look, no, I'm just kidding. I need you to hit me with a W. Okay, so winning, right? Because we want to make sure that we know what's working, what's not. What are you doing? Maybe you can even put that in the comment for everyone, right? Because it's a learning, sharing environment for everybody.
Yes.
And then if you have questions, of course, post them now, and then we'll get to them in just a minute.
All right. Okay, so let's go over these cheap contracts here. Mm-hmm. So these are screenshots from Robinhood. Okay, these are Robinhood contracts. So let's see. So first we'll go over the bid and the ask. So we see here that the bid is 7 cents. We have 78 people. Mm-hmm. We have 78 buyers. I'm sorry. And then on the ask side, they're at 8 cents and we have 209 sellers.
Right.
So the price difference that I was talking about, it would be the difference between that 7 cents and the 8 cents. So this has a 1 cent spread. So multiplied by 100, you would lose $1 if you were getting in and out of this contract.
That's amazing.
Right now.
Love it.
Right now. Okay. We see the volume. How many times the contract has been sold that day? 5,300 times. These are the type of numbers that we want to see.
Period.
Open interest, 21,000. We're just gonna round it up to 22,000.
Yeah. I'm gonna take that.
22,000. Yeah, that's how many contracts are.
But y'all see that implied volatility though?
We on open interest.
Look, Brandon said Apple on fire. We're not even there, but I feel you, friend. I feel you.
I need to know, are they still on fire? Because I ain't been able to look.
I'm not even concerned because I got out of that race. Okay, I took my coins and I collected on go.
Look, I tapped out, but then I tapped back in. Okay,
and that's always a good play, guys. You can buy back in, so don't get greedy. Just close out, get your profits, and buy back in.
Right. All right. So yes, 22,000 for open interest. Great. Mm-hmm. Okay. Implied volatility. Volatility.
Love it.
So that's just indicating that it's gonna be moving.
Period. And guys, you know, if you have paid any kind of attention to sundial, you know they can do anything. Okay.
Yeah, they're real.
They go up, they go down, but that's indicating that their implied volatility is high because their movement is high, right? Up or down.
I need them to hit $3 again. That's all I want.
That would be lovely.
We shall see. And then just some of the Greeks that we were talking about. So delta, our theta.
We like that.
Yeah.
That's so minimal.
Right. And like I was saying before, like if the delta is, or if the theta is more than the delta, we don't want it. You know. So we can see here that the delta is way higher than the theta, which is what we want.
And then we want to indicate to you, I know we talked about this on the IG Live, but I like to let you know, yes, delta is per dollar movement of the stock, where theta is per day. So they're entirely different.
Yes.
But still, we don't want the theta greater than the delta or even close to it. Okay.
Right. All right. And then the second contract, same thing. We have a 1 cent spread. This one we have a lot more.
Ooh, everything.
Juicy. This one we have a lot more buyers than sellers.
Mm-hmm.
Volume is over 10,000.
Outrageous.
Open interest over 35,000. So again, volume is how many times that contract has been bought and sold that day. Open interest is the number of contracts that are out there.
Woo!
For this specific contract. Okay. Mm-hmm. Implied volatility, again, high. These are contracts that we would consider good.
Great.
Mm-hmm.
I think this is mine. Let me look.
It might be. Okay.
We don't know. We post team wins. We post everybody's stuff, our stuff. So who knows? But look, this is what the example shows. This would be the idea of a great contract. Okay. And that still had a 1 cent spread.
Right.
Okay.
Moving on. Taj, let's leave him with some advice. Well, we're not done yet, but Taj will give some
Okay. All right. So this bit of advice is call options and put options form the basis for a wide range of option strategies. All right. Designed for hedging income or speculation, meaning strategized predictions, right? That's what I was talking about. If you have some kind of indicator that this stock is going to rise, or people talking about Microsoft, right? What's going on with them? They think they're going to plummet. Okay. And that might be true. But it's Microsoft at the end of the day. They're going to bounce back. So you might be picking out your calls or your puts far out on both sides, and you may be playing both ways. So that's the thing about the call and the put options, right? It could be various reasons of how you go about making your decisions, right? And how you're using it. Income, it could be to also reinvest the money. We do a bit of both, right? We take some out, right? It could be, as far as me, first was paying down debt, and then using the rest of it to buy stocks that we really wanted to invest in long term, right? That paid dividends, or it was just a great growth stock. Then we take the rest, whatever's left, that small amount. So maybe we had like $60 left or something like that. We then go buy another option contract and do a rinse and repeat, right? That's what we did. There's nothing wrong with that. If you're a vacation bug, hey, use the money. If you just want to, I don't know, just keep saving and investing, then that's what you do. So it's really up to you. There's no right or wrong way.
Right.
And just like there's no right or wrong way to get started. Some people say, oh, you got to start with investing. That's not true. That's not how we started. And I'm not saying that we were right. I'm saying do whatever works and then get better and learn more along the way. Okay. And we're still learning. Everyone is still learning
every day.
Although there are many opportunities to profit with options, investors should carefully weigh the risk, right? This is about doing your due diligence. Okay. This is about learning the ins and outs of your companies. And that just comes to watching them, knowing about them, or just knowing like Nike been around for years. They don't look like they ever slowing down. They always get the next top athlete. And whether it's college, whether it's women, whether it's men, you know what I mean? So they are going to be formidable always. Disney, you know what I mean? So some things, it's you should know who is whom, right? Blue chip stocks, right? Stocks that pay dividends. So it's just about doing that research, and everyone's going to take a hit. Every company takes a hit. Majority of them took big hits for the pandemic, but the ones you knew, like some of them I just called out, bounced way back, right? That's what it's about. So just doing your research and staying connected with resources. We help you stay with us, but there's tons of them, tons of people on Instagram, BISG, which community you're from, connect with your friends and family who talk about the same kind of thing, right? It's all about that mindset, locking in, doing your due diligence through various resources, reading books, whatever it takes. But go ahead. All right.
So we just wanted to share with you some of our wins so that you guys know that you don't have to spend a lot of money. Like we said, we always encourage on a budget. Like we'll always hear us say on a budget, budget. You don't need a lot of money. You'll always hear us say that. But here are just some examples of what we mean by that.
Right.
Okay.
Like, look at this. I don't think there's no contract over $100.
No.
Right. This first one, top left. Okay. That was 12 cents, guys. The cheapest one on here I see is 8 cents. 8 cents. So this is why we post these, right? Of course we paid more money. And of course, of course we paid more money for contracts. Of course, those, we make more money as well. And on the cheap ones too, we just didn't post them. But why we post these is because people always ask us how much they need to start with for option trading. Well, I just told you, this cheapest one was $8, right? The other one, the next cheapest is $12. Off of $12, I bought 5, so I spent $60 and turned it into my profit of $430, right? Okay, guys,
it's possible.
It's way more than possible. And just so you understand, when you're looking at this, you always care about the total return. Period. Okay. Today could have been great. Yesterday's horrible. Guess what? Total return. That's what you're taking home.
Yes.
Okay. And then when you see the equity at the top, that is the number that represents your total return plus your investment. So I profited $430, but they're going to give me my 60 back, right? Because I am profitable. So that's the equity. I have now $490. So that's what I got when I sold. Okay. Just so you understand some of the lingo. And that contract, let me just tell you, friends, and you can look at the break even right now. I just want to bring this out. This is what we mean. Tesla, and this was back last January, just so you are clear, right? Last January. Tesla hasn't hit that number since before the pandemic.
No, it was just way out of the money. It was way out.
No, I know, but I'm saying this is the break even. So the strike price was $1,200 or something like that. And I'm saying our point to the beginning of the call. It does not need to hit your strike price or the break even to make the money. Period. Okay. I was already profitable. Now, had it done that, friends, I don't know if we'd be doing this call. No, I'm just kidding. Right? I've been a millionaire. But anyway,
no, we would have still been sharing knowledge.
Period. Because that's what it's all about. It's all about learning together, seriously, because some people think it's just about the money. No, these calls are free. We do them all the time, right? Because when we started learning this and making money, right, these little numbers add up. I don't know if this was all in the same week, but probably the same month. But what I'm saying is these numbers add up. Period. So don't discount your small wins, and then you roll them over to get bigger plays and things. And it's so important. So when we started learning, we immediately started sharing. Like it didn't even take a month. I don't think we were like, oh shit, we really making money. We gotta tell our family. That built on from telling friends, and then it just became a full blown like, oh, let's do a Zoom call and tell people. And who knew it was gonna turn into a real business, but it did. And this is why, because it's about sharing information. Our people need to know that this kind of money is out here.
Yes.
Okay.
All right. Utilize all of your resources. Mm-hmm. There are tons and tons of resources out there for you to use. Investopedia is one of our faves. They give you all types of information.
Yeah.
Not with just options, but anything having to do with money.
Period.
You can go on Investopedia. You need to learn how to save. You need to learn what a credit card is. You need to know what money is.
Yes.
Investopedia will give you.
Right.
Okay.
And if you're someone like visual like me, YouTube will be one of your best friends, right? People going through things, breaking them all the way down in your face. YouTube is going to be great. I know one that's not on here that we use a lot, Trish more than even me. NASDAQ, okay? That's that dividend play for a lot of people that don't know.
That's for stocks.
Oh, well, just so you know, you're right. We are an options call, but I'm just going to tell you, okay? In case, this might be a little risky, but you're still trying to make some money. NASDAQ.com, okay? That's where you're going to find out the dividend plays. They tell you when you need to buy it, how much you're going to get, when you're going to get it, everything. It's one of the safest moves you can do. As long as you're on it, you're going to get your money.
Yes. So, Finviz is a stock screener. So it'll tell you which stocks are performing well that day. I like Finviz because you got the big boxes that are in red. Oh, that means, oh no, that's going horrible. But sometimes you have the big boxes in green. I think yesterday Apple was a big box in green on Finviz. But yeah, it's a stock screener. Just lets you know how a company is performing. Sector Spider is the same thing, except it does it in sectors. Stockcharts.com. I use that for charting. EMAs, RSIs, things like that. I'm sorry.
And if you want a good, the greatest resource, I was like, what you about to say?
I'm just naming all types of stuff. All right. And then Yahoo and Google Finance, same thing, like with charts, options profit calculator. It'll tell you your potential profit on a options trade. Thinkorswim is great for indicators, just like stockcharts.com. And then the ISG.
Come on now. Y'all know that's a great resource because you got some of everybody knowing everything in there. And that's the great, right? Because you pluck each other's brains and you absorb. And that's what we can't tell you enough. Reading the books and connecting with people. Saying what you don't know. Saying what you are good at. It's a balance between that, right? No one is smarter than anyone. It's just that maybe they got a little bit more information in that box than you. That's it. If you change the box, you might be the teacher. So that's what we're saying, right? So that's the kind of space we provide. Is no one smarter than anyone.
Right.
We learn from each other and we grow that way. And then, of course, us. We hope to be your favorite resource, right? You come here, you ask the questions. If we don't know, we tell you we don't know, and then we go find it. Simple, right? Because we connect with people who do know, or we find information. So that's it, guys. That's really the resources. That's the information. Now, let's get to these questions.
Oh,
you wanted to?
Yes. How to find us. So our website is her-investments.com. You can go on there to become a member.
Yep.
You can look at our cool merch because it's awesome.
All right, like this here. And we do got the men's stuff, so don't be fooled. We do.
Right.
What else? We have classes on there, right? Our next one is starting July 24th. We have courses for anyone who's interested.
Right.
And then also blogging. So you can share how you felt. Well, you can do that on this right now. Tell us how this call was, this first live for you. Did you get the information you wanted? Our energy, you know what I mean? Did we give you the info? Just anything you want, right? Or what is that you want to know? What would you like in the next call? Something like that. I keep saying call because so you do Zoom calls. The next live. Let us know. But now let's move to the questions.
Oh, our IG. You can find us on IG, AchieveHer_investments. That's where we do our market talks every Monday. And then, of course, on YouTube, which is where we are now. Make sure you guys subscribe.
Japanese said, yes, shout out to BISG. Yes, girl, for sure.
Sign up for those notifications as well on YouTube. So you know when we're going live.
Instagram. I think you can do notifications everywhere.
Or when we post something new. Yeah, you could do notifications on our website, our IG, YouTube, Twitter. We don't have a Twitter, but
we don't. And I can't do another platform, people. So please don't ask me for
maybe one day. Maybe not.
Anywho, definitely appreciate that. Thank you. No, y'all are awesome because y'all show up and y'all answer the questions. You stay in inner what do you call that? Engage. I can't even talk right now. So it's important, right? Because we just want to share. We just need people to know that this money is real and it's for everybody.
Right.
Okay. You making $100 did not change me making $100 or $1,000 and vice versa. So It's no point to not share the information, and everything doesn't have to come with the cost. So you can literally, and I've watched people, okay, like Greg, you can literally go from a Zoom call to applying the information. All right, applying it, taking action, and start making money, or at least start figuring out the process, right? That's really how you get it. It's not just by researching and reading, it's taking action. All right, so next few minutes, we're gonna go ahead and jump into some of these questions.
All right, so I have one from earlier. Out the money budget options. While looking at the stats in Greeks, what prompts one to make a definitive decision on the better option? I think I mentioned it earlier. So not everything is going to be perfect when you're looking at those stats in those Greeks. Like I said, we have our hard stops. So if there's nobody in the bid, or if the theta supersedes the delta, those are our hard stops. We will not touch those contracts.
Right. Or spread is crazy high, but it's not on a company that has extremely high implied volatility. No, the answer is negative. And I'm saying negative of, if you want more for me than $10, no, I'm not doing it.
-5. So if it's more than 5, I'm like, unless it's like Tosh said, one of those companies like that do have those high,
Google, Amazon,
right,
Tesla, you're gonna pay for it.
But yeah, so on any other contract, if everything else looks good but the volume is a little low, then we'll make that leap. If the implied volatility is not the greatest, I'll take that leap.
Right.
Because like Taj was saying earlier, sometimes you're forecasting, sometimes you're betting that it's gonna eventually reach that. So but by the time everybody else is buying in, that's gonna make that premium go up, which means that implied volatility has gone way up. So not everything is gonna look perfect when you're buying the contract, but you just have to analyze other things, right, when getting into that contract to know if it's worth the investment. Okay.
Yep. You got something else?
No, that was the only one I had.
Okay. Here. So, Prude, last name Prude. Thank you. Back to you. Okay. So if the average, Japhanie. Oh, I skipped somebody, but we're gonna go to this one first, and then laughing 808. We're coming back to you. Okay. Japhanie, it says, if the average cost is the price of the contract, what exactly is the current price? Or what is the difference between the current price and the average cost as it pertains to options? Great question. So when you pull up your options contracts, right, and it says average cost, Trish, matter of fact, pull the screen back. I think it shows on there. Yeah, you're right here. Nope.
Oh,
right
sorry.
there. Okay. This is what Japhani's talking about. Okay. Just so you know.
Oh, I'm sorry.
Look at my friend.
I'm trying to get my laser pointer.
She over here messing up.
Okay,
I'm just kidding.
Go ahead.
So this is what she's talking about, guys. Oh, look at that. I've never worked the laser pointer. I feel fancy. Okay. Y'all don't even know. So the average cost is this price right here. So remember in my example, I said it was $12. That's how much I paid. Oh, guys, remember everything you multiply times 100, right? Because 100 shares, everything you multiply times 100. So this says 12 cents, but it was $12, right? So remember I said I bought 5, so I paid 60. But back to her question. I paid $12 per contract, okay? So that's how much it was at the time. That's what that premium was. As the stock moves up or down, that premium changes, right? Not after, it changed after I bought it, but I'm already in, okay? So remember, this is when nobody thought it was popular. I bought it, right? But guess what? It got popular. So now it went to 98 cents, okay? So I bought this. I just remember this one because this is what I talked about a lot. I bought it at the end of the day. I don't know what day it was. It could have been end of day Thursday. By Friday morning, it was here. Okay. So this is the current price. So now I'm selling, right? Because I've hit my target, right? And your target number, your target exit can be either a dollar amount or percentage, right? So usually with Tesla, I just go with percentage because you never know what that dollar amount is going to be. Right. So that, I hope that helps you, Japhani. Okay.
And another reason why it's average cost is because sometimes people average down. So let's just say, so Tosh spent $12 on this contract. Let's just say it went down to $9 and she went and bought 5 more. It's gonna average out how much you spent on that contract. So it would be somewhere in between there, probably like 10. It would change that average cost to like 10 cents.
Right.
So essentially, it's like she's paying $10 per contract. Okay. So that's why it's called average as well.
There we go. All right. You want to answer laughing? 808?
How do we find stocks worthy of option plays? Do you use a stock screener to find option plays? Yes. So FinBiz, great resource, great stock screener. But then we also have companies that we stick to, and we use their patterns to determine what stock or what option play we're gonna do. So let me say again. So any stock can be worthy of an option play.
You can make money with anybody.
Exactly. So I would say what companies, start with the companies that you're interested in, start looking at those, and just start looking how they move. Look at the times that they make certain movements. It could be during like earnings. They take huge jumps during earnings, during news, any type of announcements. Right. How they perform during power hour, how they perform when J Powell speaks.
It's never good.
Anything like that.
No one ever does good. No, it's good.
Look, I think
I'm serious.
I think Gold was doing good today after he spoke. But yeah, so you just kind of look at their charts. Look at their 52-week high and low.
Yeah.
Just things like that. So any stock can be worthy.
Literally. And we don't mean that to like, oh, anybody. No, I'm dead serious. Anybody. And they don't have to be expensive. Like what? The Sundial. People make crazy money on Sundial and it's not even $1. Or that's the most it's been. I mean, until they did crazy jump like she was talking about.
Right. I think they made a ton of money today.
I don't know. I didn't make a ton of money with them today, but I'm holding. I'm looking forward to the future, friends. I have made some very good money with them, so I'm not mad. But okay, so Greg, the video. By the time anybody bring up the video, I'm just like. But anyway, okay. You said you're looking at getting some of that because that 4-to-1 split. No, my friend, that's a great thought. Get it.
Yeah, and they keep having price target increased by analysts, so. Yeah, I'm not mad at you.
Sorry, I didn't even read the question. What was the question? Right, because that's how we get when we talk about the video. Like, oh my God. Out the money option on a budget. Look, the only thing I've ever seen for them on a budget, my friend, to be real honest, is risky plays, which we're not against. But I'm just saying that's the only time I've seen them be affordable. Okay, I'm talking about 35 cents, 65 cents, like literally, but real risky. I'm talking about buying on expiration day or buying Thursday market close, okay, ready for Friday morning, or buying super early, like you hope you get in, because you know with them, you can wake up and they up already $8, $10. So your premium is going to significantly go through the roof. So you need it to be in already. So out the money option on a budget, I don't know. What I do know is risky options on a budget that still are highly profitable. Okay, highly profitable for people buying on expiration date or near, right, Thursday before expiration date. I think buying shares, waiting for the split is a great idea. I don't think they pay dividends, right? I don't think they do. She can check for you real fast, but I'm pretty sure. I'm saying I don't know if they do, but what I know is that 4-to-1 split is real. So and it's funny because I thought it happened already.
No, it's later on this month. I want to say look, don't get me to lying.
Oh, I might need some. How many you getting? Don't you look.
Don't get me to lie. Oh.
Let's split it. Let's split it, Greg.
Oh, please.
Hold up, they pay dividends?
They do.
Oh, so Greg, you're gonna need them.
Oh, we're in July. They paid their last dividend payout was July 1st.
Oh, so we missed it.
They were paying 16 cents per share.
Oh, we missed it, friends.
But now that they're doing a split, I don't know how that would affect their dividend payout. I wonder.
I don't think it would have had too much infection. I don't know if I don't know if that affects too much because the split still hasn't happened. How about next year?
Right. Their next dividend.
That's gonna be crazy because it's a 4-to-1 split. People gonna eat good.
Yeah.
Oh, yeah, Greg, friend, you gonna need that. Tell me how it goes.
Can you give me some too?
That's what's it.
While you at
tell
it.
us how it goes.
No, don't tell me. I don't want to know how it goes. I just want you to get me one. And then we wait for the split. Gift it.
Right, Greg, like, wow. Yeah, right. Okay. So they just a win all across the board. I don't really care what you're doing with them. Win. Okay. So I do not refute you getting them on expiration date. Try it out. I mean, like I said, but we're talking about minimal investments, right? $35, $60 or whatever for a chance to hit big. And I'm talking about a big play.
Right.
Okay. I've watched people turn that 35 into thousands of dollars because they move that way, right? They buy a couple of contracts though.
Look, Greg, he said I'm going in.
You better go in. I already know it.
And I already know hard. And he's gonna go hard. I'm sorry. Okay. I'm done.
Lord, like it's a good time when you with us. But any other questions, guys? Because we're gonna head out. If not, we try to rock for you guys. But it's been great. Yeah. I think this is the first time we got through it this quickly. This is great.
Yeah, I think I kind of like this YouTube live thing that we got going.
Right.
Yeah.
So yeah, you guys just let us know. Like we said, any other questions, but if you guys want to connect with us, please join the website.
Yes.
It's fun there too. You get to chat with us directly.
Right.
You'll see all the updates, right, when we're doing the new IG, what the topic is, any course information, any class information. All our outlets are there, so all our platforms. Yeah. Oh, CCIV is good too. I haven't really played them though.
I've never played them.
I haven't played them, but the reason why I know the name is because so many people have, shot me screenshots about them. Ask me what I think. Think it look good, friend. But you just got to pick the right thing. Oh, thank you. He said this. Let's get this money. You better get this money.
Yes.
Look, when you get it, you tell us about it because we like to see it. It's so exciting, really, to see people learn and apply action from Zoom calls. And like, I know you guys know that we shout out Greg all the time, but you know what? When we have not met Greg, but we know Greg. You know what I mean? Right. You see what I mean? Is the power of communicating and building with somebody and then watching them take your information, applying it. That's the dopest thing ever, because that's how we know the information we're giving is working, right? That we're giving solid information, and we don't know everything, right? We're brand new in it. I know you guys think that we're not. We kind of are, people, but that's why we wanted to share it, and it mattered so much, because don't think because you're new that you can't make money. Yes, you can, and you can build your whole damn platform off of $30.
Right.
You can build your whole portfolio off of $30. And hell, 20. I'm sorry. What did I just show? I showed a $12 play.
$12.
So it was 8. So don't get it twisted. You can, and we're that crew that's gonna tell you that and promote that, because everybody isn't working with hundreds of dollars or even $100. And we're here to tell you, so what? Because you can still make it, right? We're here to show you how you flip that $5 into 100, and you take the 100 and move it and keep on doing it and recycling, right? Because what if you're making this kind of money every day or every week, right? It could change your entire situation. That's what this is about.
Wanda is asking, what do you mean by purchasing on expiration date? Is it my expiration date? Purchasing it on, buying it the day it expires. I'm like, wait, hold on. I'm just defining it with the words that
Wanda, she's not helpful.
I'm not at all. So don't come to me. No, I'm just kidding. You can come to me with questions. I'm smart some days. So it just means that you're buying it on that day. So let's just say this Friday is, I was about to say January, July 9th.
Always great. Always.
July 9th. So that means that you're purchasing it on July 9th and you're selling it, essentially doing a day trade.
That's what I was going to say, key. Yeah.
Yeah. Okay. So buying and selling it on that day.
Mm-hmm. And nothing's wrong with a day trade when it's a great day trade, when it's a great potential move, right? Because none of these things are factual. Because NVIDIA could jump out and they can move $8, but guess what? Right. In the wrong damn way that you need. So don't think because your portfolio is red that means mine is. That's why we say you can make money with anybody, because we don't know. There's how many companies? All right. So people get in at different times too. That's another key point on options, right? People ask us all the time. Maybe one day we should call on like commonly asked questions. I think that'd be a great call. The reason why I say this is because you could be ready to sell. We have the same contract, but guess what? You might didn't get it when I got it, or vice versa. So your time to sell is not my time to sell, right? Granted, Trish just told she bought back into Apple, right? We both had one. We had different strike prices, though, or different expiration dates. I don't remember, but they both were solid contracts. I hit my number. She hasn't hit hers yet. It's on the way, but that's what I'm saying. So if I said, oh, I'm selling now, and she sold, why would she do that? She needs to have her own target number, right? That's either a dollar amount or a percentage, right? That's why we tell people, stick to your strategy. You can learn from others and work with theirs until you find what works for you, right? We went on a corporate. Yeah. We worked on various ones. The first group we follow, or guy, he was saying 150%, right? 150%. That's when he got out. So we're like, okay, we're doing 150%. But guess what? Every company doesn't move at that number.
Right.
So sometimes we got caught holding a damn bag because you sitting on waiting on 150%, right. But it's not going there. Mm-hmm. Maybe they tap out at 100% and I'm profitable, but I'm like, I need 150. No, you don't. I need what works for me right now in this. Some people take profits at 60%,
Some
right?
People take 20 to 30%.
Because they're going on a consistent day move. So as long as they hit this number per day, that's what they're winning, right? Because if they're getting a solid, let's say, what's that? Let's say it's $75 per day. Guess what that is for the week? Right? It's about what works for you, your strategy. So they don't need to be greedy and get 150%. And I'm not saying we were greedy. That's what we thought. And so some plays we still do that. Other plays, you could jump out. I think one of the contracts you guys saw, it was 700%. I didn't wait for that number. It hit it. It just like, boom, it took off. And that's what will happen. So when you see that, you sell because you know your number. So that's why we never, it's not that we don't like the question. It just like, it depends on you. Like if you pay 10 cents for a contract, $10, and you wake up today, the next day or tomorrow or the next week, and that thing is at $200. Are you going to be asking me, should you sell it for this profit or should you hold it? I don't know. You should get the $200, what I'm going to say, and then buy back in at a later expiration date so you can get another 200 or whatever it's going to be. You don't need to hold this one. Sell it, buy out.
You can always
that's the buyback in.
Right. And Greg is saying 30 to 70%.
Mm-hmm.
That's
good ones. I'm glad that made sense for you.
You have to have an exit strategy before you even get into a contract. Right. It's always important.
Right. Okay. So yeah, that's it. Like, I hope that we answered everything. If anybody has anything else, you can always leave the comments. Like, we check in periodically. I'll be out tomorrow. But you know, Trish is here.
I'll be here.
Trish is here. And you know, I'll tune in with you guys, you know, as I see it when I can. As always, you know what I mean? We're busy. You know, we're people just like you guys. So at the end of the day, that's all we want to do. We want to just make a great call, give you guys some information.
Yes.
Look, Greg said, don't be greedy and get burnt. Yep, it happened to me on Neo. I don't want to talk about it. Just know I was slipping that day.
I've been burnt a few times.
I fell asleep, and that's just what happened, right? I didn't set my target. I just, you know, I was like, oh, it's going to be cool because it's Neo, right? They move around. Yeah, they did. They still moving around, just not the way I need them to. if we want to be real.
Today was
horrible. Okay. But anyway, glad to always talk to you guys and glad to share the information. We can't express that enough. So just keep tuning in to everyone, not just us, everyone, and it will get there. You will get there for real, because you only get better. What she say, Wanda? I've tried to sell and put my order in, and then Robin had rejected it and said it was canceled. What does that mean? That means that it just didn't go through. So
you gotta try again.
Yeah, because if it was canceled, sometimes that's because now it went. Market closed, so now your order is canceled because no one bought it, right? So now it will still be on your list come tomorrow, or you see it right now, it's still sitting there. That's all it means. So nothing happened. It's just that you need to put it in at a different number. So when you went to sell back, you probably were too high for what a buyer wanted to take, right? And they're greedy, right? They're stingy. So if you don't meet them at the number, or your thing doesn't move fast enough, that will happen to you. And that's okay. Sometimes you just have to re-enter it quickly, but that's okay. So tomorrow you try to get out if you can, and hopefully it's doing better than what you even thought.
Right. But if you want to get out of it, you know, right away, then just make sure you're selling it at that bid price.
Yeah. I'm sorry. Go ahead.
Because that means you'll just get out of it right away.
Yeah. He said, I have to. Yeah, everybody gets burnt. That's part of the game. Look, it's part of the game. And don't think because you've been doing it for a while, it still won't happen. Sometimes it happens because you forget. Or, you know, you didn't catch it fast enough because some of these things move fast. Okay? You could be like, oh, I'm going to come back. I'm going to run to the bathroom. And then you run to the bathroom, you crying. It can be literally like that depending on who you're playing with. Oh, Wanda, thank you. You're awesome. You're on everything. We appreciate you too. You always chiming in. You always tuning in with us. So we appreciate that. Now, so we got to make sure you guys get the information you need. It's so important. That's all we can ever say. It's just so important. And it gets better. It gets better. Mm-hmm. Anything else, Tristan?
No, I think that's it.
All right. So until the next time, and you guys will see the post. So next thing we have, of course, live is Monday. But like, don't forget classes start because some of you are in the class that's coming up in 2 weeks. I feel like, or is it? Yeah, it's 2 weeks. I think July 24th. Let's get ready to rumble, guys. We got hard in there with you guys for 3 weeks. It's gonna be fun. It's a lot of information. Just think about this magnified. That's what it is. And it's fun. So at the end of the day, we're going to say good night. Everyone be safe. Have an awesome weekend. Be great. Get out here. Apply this action. Start minimally and learn what's going on, okay? That first trade is not about your profits. I can't express that enough. It is not about your profits. What do we care that they get from that?
We care about you understanding what's happening. During that trade.
Right? All those numbers that we talked about, those stats, those bids, those asks, the volume, the delta, all those numbers move as the stock goes up or down, right? So we want you to just get an understanding. You won't grasp everything. We didn't, right? You start to understand what's happening, seeing how it moves, seeing how you buy, seeing how you sell, right? Those kinds of things. That's what you want to get into. So that's what's important on your first trade, okay? Learning. And then you go from there, right? All right. So we hope we got more to talk about and share when we see you guys the next time. All right.
Good
Good
night,
night.
guys.